Hello, welcome to Interesting Colors. My name is Jerry, and this video is all about timing, entries, and exits. The Interesting Colors YouTube channel is all about technical analysis of charts on the Thinkorswim trading platform. And to that end, we have lots and lots of scripts associated with showing trend. We've got the market phases that show phases 1 through 5, and it turns out phases work both for daily bars and for weekly bars. And generally speaking, if you're in phase 2 or phase 3, or as James Boyd refers to them now as trend 2 or trend 3, that's a bullish posture, and you can generally count on the stock price going higher and higher. And likewise, if you're in a bearish posture with phase 1 and phase 5, you can kind of sort of, or you should be expecting the price to fall. And if you're hitting resistance, you will be in phase 4 and maybe setting up for a bounce, or maybe going down farther. We've got the 10-day EMA and the 30-day simple moving averages with, in fact, on a number of my charts, most of the charts, I've got it configured to show the posture of the 30-day simple moving average as either bullish or bearish, depending on where the price is in regards to the average. We've got the relative strength that shows how well the stock is doing in comparison to the S&P 500 over a specific time range, a time span. And that's very useful to know with regard to your stock and how it's doing with the broader market. And then we've got the whole ribbons that we use for showing near-term trending states with the whole 10 and whole 20 moving averages. But the things that we don't have are really a lot of tools that talk about timing. And timing is really important, especially if you're thinking in terms of making a trade. Just because you're in trend P3 or P2, if your timing isn't good, if you enter the trade late in the phase, you could be setting yourself up for some pain. And you should really think of timing. It's more helpful, at least from my mind, to think of timing in terms of being overbought or oversold. And if you think of it as like a channel, either a upward moving diagonal channel or a downward moving diagonal channel, or perhaps going sideways, and you think of it for a specific period of time, you can kind of get the perspective. Oh, well, over this period of time in this channel, where is the current price? Is it near the top of the channel or near the bottom of the channel? Does that mean I'm overbought or I'm oversold? And oh, by the way, the more of these hits that you get in this area, by other indicators, they can be viewed as timing confirmation. You shouldn't actually do anything with just based on one indicator. And then we've got the white dots. And you say, white dots? God, who talks about white dots? Nobody. I talk about white dots. But I kind of coined that expression because I was looking for a relationship between whole 15 reversal patterns and something else. And, we know what the whole 10 / whole 20 patterns look like, and they move pretty fast with the stock. But when you marry those with the market forecast study, you find that we get to show it shows, I think, significant trend reversals. And it works both for daily bars and for weekly bars. And it turns out when when you put them together on a weekly chart, it can be quite dramatic to see what's really going on. We've got the price percentage oscillator that basically is the MACD of a couple of moving averages divided by the moving average itself, and it's really good at showing the a raw percentage of where that price is at. Again, it needs to be done within the context of a specific time period to add meaning. You've got the stochastic 14.3 that I saw James talk about it once, and it seemed to fit. Again, if you put it within the context of a time frame, it's good at showing oversold and overbought conditions. And then we have the whole ribbons with the 10-day and 20-day hull and the timing crossovers that are associated with the whole 10 crossing either up through the 20 or down through the 20. And last but not least is the VIX. And this is truly one of JB's favorite tools for timing. And he will bring it out anytime that the timing is low, anytime that the VIX is low, and it looks like it's starting to rise. So if it's sitting in P1 for a long time, phase one for a long time, nothing's going to happen. But if that thing starts to move towards towards phase two, and the MACD associated with the VIX actually turns green, he is going to come out and start talking about collars. He's going to talk about any kind of protection that you need to be thinking about. So let's talk about the white dots and the significance of the white dots. And it turns out I made the comment that the white dots work on both daily bars and weekly bars, and basically it's the combination of whole 15 moving average reversals. So if you've got a bullish reversal, you're going to see the whole 15 reversing from the downward slope to an upward slope, and it's also married with the market forecast indicator line, either in a strongly bearish or slightly bullish condition. And on the chart, I just put it as a white dot, and it turns out if it's a bullish reversal, it's always going to be below the 30-day simple moving average, and if it's a bearish reversal, it's going to be above the 30-day simple moving average, and it's just a white dot. And it was just something that I came up with because it seemed to work and match a lot of things to show general areas of resistance or areas of support, and it was great for confirming other things that I was seeing at the time. So on the watch list, the white dots show up on the weekly trend column and the monthly trend columns, and the raw numbers just show the percentages of what the stock has done over the last week, or the last month. And on the weekly column, we're using daily bars, and on the monthly column, we're using weekly bars. And so if you end up seeing a really, really dark blue background on one of those columns, you should know that you're seeing a bullish reversal that's happening right now with regards to the whole 15 moving average and married with the market forecast. And likewise, if you see a light blue color background, you're again seeing a white dot, only this is a bearish reversal. So on the chart, it looks something like this. Here's some white dots that we've got. They're showing those whole 15 reversals. The red dots on the chart up here represent the close below the low of the high day. The green dots are CAHOLDs, and they're going to show reversals to the other direction. But typically, the interesting thing that I spotted was the fact that oftentimes you're going to see either a close below the high day married with a white dot, or you're going to see a CAHOLD. Here's a CAHOLD over here. CAHOLD married with a white dot, which generally in my mind signifies kind of either a resistance area or a support area, and often not, because there's a CAHOLD involved or a close below the high day, you're going to see either a potential bounce up or you're going to see something falling back. So if you find a white dot on the watch list and you go back and you compare it with other indications that you see on the chart, you might find yourself in a situation that looks like this and ask yourself, what am I doing? Maybe my stop should be at a different place. Maybe I should think about taking off that options trade to make my trade less bullish. So with those thoughts in mind, let's take a look at the chart. So today is 12/31/25, and this chart looks a whole lot different than it did a few days before. Apparently, it's the end of the year, and a number of people decided, well, this little Santa Claus rally that we had was nice, and it's time to take a little money off the table. So they did. So you see, here we are looking at the S&P 500, and there's a lot of close below the high day. So there was a lot of pullbacks today. A lot of red here in the percentage changes column, and we were just talking about the white dots. So if here is the weekly growth column that's in daily bars, excuse me, and here's the monthly growth column that's in weekly bars, and the blue bars that you see on here, the light blue bars, show us that we are having white dots on the screen. So in the case of this first one, I'm just going to grab it. Actually, the first one is GE, and GE, pretty interesting. GE has had a phenomenal growth this year, 84% up for the year, which is not too shabby for GE. And all of a sudden today we've got we didn't show a pullback today as a hold, but we are seeing that there is in fact a white dot on the daily chart. So let's look at that. So here it is. This is the 6-month version of GE, and there's the white dot that we were talking about. If you look at the 1-year version, you can see that there is the white dot. Kind of significant because it was quite a bit off of the 10-day exponential moving average. If you look at the chart, we're not really overbought right now because we're sitting just right at the 10-day exponential moving average. But that's what the white dot would look like. And if you look across the chart, we're looking at 6 months. Let's look at the 1-year chart. You can kind of see that, yeah, those white dots, it happens to see that they do in fact correlate with close below the high days. And when you see those together, there's that dip I was talking about, and there's a dip. Here's one that we had a close below the high day, but we didn't see a white dot there. And here's one we had a fallback. So you can see it's a pretty good correlation trying to tell you that stuff's going on. And I can't tell from this particular spot whether we've had a red dot in here or not. And yes, we have. So again, this is a potential setup right here telling you you might want to think about lightening up on your position a little bit or taking something off to reduce your potential exposure to um, reduce your potential exposure on this stock. I mean, you don't have to, but it's just, hey, it would be prudent if you thought about it just a little bit. So every one of these highlighted areas on either the weekly or monthly column is showing you, where we're sitting with regard to a white dot. Just for grins, let's look at Caterpillar right now. It's showing a white dot on the weekly bars on the 3-year chart, and we can kind of get a picture of where that looks like. Looks to me, just from my where I sit, it looks like it's kind of in the overbought category as well. Again, overbought, and maybe in time to take some protection against what possibly could happen. The next one I'd like to talk about is the price percentage oscillator. And the price percentage oscillator, I really like it from the standpoint of what does it look like? Because when you look at this thing on a 3-year chart, you're really looking at, what's the big trend, if you will? What's really going on? How is it changing at the weekly level? And in a nutshell, this one here is using two moving averages, using the 6-week exponential and the 13-week exponential moving average. And if you look at the actual formula for the price percentage oscillator, the PPO, it's the difference of the fast moving line versus the 13 moving line, and that by itself, just the difference of that, that's the MACD. That's the MACD of the stock for those two moving averages. And if you divide it by the exponential moving average for the slow line, the last 13 days, you're going to get a percentage. And that percentage is going to be anywhere from 0 to 1. So by itself, it's just telling you, hey, what the percentage is. The thing that's unique about the price percentage oscillator is that it's universal. You can go to any stock that you want, and it's kind of neutral. It doesn't care about the price because you end up dealing with a percentage. The next thing that's significant about the PPO is if you're looking at this thing over a period of time, and just pick a period, whatever it is, and during that period, if you take the difference between the current PPO figure and you subtract it from the lowest PPO figure that you can find over that same period, and you divide it by the difference, you're going to end up with a ranking. And this ranking value is going to be anywhere between 0 to 100%. And you say, well, that's nice. And what you discover is that if you have rankings that are over the 90th percentile, I flag that as overbought. Or if it's less than the 10th percentile, I flag that as oversold. And on the chart, it kind of looks like this. So here's a weekly chart. And oh, by the way, we've got some white dots in here, and we've got some CAHOLDs, and we've got some close below the high days. But this bar, this area right here, is the PPO. And here's the MACD in green bars and red bars. And the PPO is this line that's kind of trickling back and forth here. And if it's rising, it's green. If the PPO is falling, it's red. The little label that's over in here shows what the current rank of the PPO is in the chart. So right now it says we're at we're at the 58th percentile over this last 3-year time period. So that's kind of significant. That tells us we're kind of in the middle of this. We look at 3 years and we go, well, that's a lot, but hey, not really. It's about where it's supposed to be, according to what the chart's saying. And if you happen to be in an area where the percentile is less than 10%, if you're below the 10th percentile, I'm going to paint some little white dots down here. And these are strictly for the PPO. They have nothing to do with the white dots that are up in the chart. So this is just showing that we are below the 10th percentile on for these particular weeks. And likewise over here, we're showing that we're stronger than that. And so when you compare the actual chart and you start looking at it, you go, wait a minute, yeah, we're considerably higher in this range. And we've fallen down here, and yeah, for some reason, it takes a while to catch up. Well, so let's look at these. Let's look at how the PPO would look in the watch list. So if we cruise back to the chart, let's open up the watch list for the same watch list we were looking at. The PPO column is right here. And the significance of what you're seeing for the PPO is there's the actual ranking percentile for that 3-month time period. So if you look at the formula, yes, we are in fact working with weekly bars, and we are in fact looking for, there it is, for the last 3 years. So we're looking essentially at the same thing we were just looking at on the prior chart. And if it's red, it means that the PPO is falling. If it's green, it means that the PPO is rising. The thing that's interesting about this is if there's a green bar on the chart, it means that we are above the 90th percentile. So it's interesting. Here, if we look at GM, which we were just looking at a little, well, we weren't looking at that before. Yeah. We were looking at GE. But in the case of GM is showing that we are in an overbought state. We see that and this is the part that's interesting, we see that the PPO has started to fall. Just for grins, let's go look at this one. This is for GM. So here's a case of where we have been in an overbought situation. We're looking at GM for a 3-year weekly. And here's a case of where we have if I can do it for this guy. Maybe I can't. There, we have to do it like that. Oops, I'm going to be messed up. Let's pick a different guy. We'll come back to GM. All right, here we are. So here's a case of where we've been in an overbought state for quite a while. But just recently, the PPO has started to decline. So the question is, where is it going to go? It's kind of like in the same question. We have been overbought. If you compare the current price with the 10, this is at the weekly level. So if we compare it with where we stand on the daily bars, you can see we're really not overbought from a percentage standpoint yet. But on a daily perspective, we're back at the 10-day EMA. But you can see that on a weekly level, we're still quite a bit elevated over the 30-week simple moving average and the 10-week EMA, if you will. So it's pretty overbought. And if it were me and I could think about what would I be doing, again, this would be another one that I might be thinking about. Do we see that combination with the white bar, the white dot, and the red dot? We haven't seen that yet. But that'll be coming. Pretty soon it'll show up. But this is like a precursor of what you could be looking for. So if you go back and look at this, maybe we can see a situation where we have something that looks like that. Here's another case. Here's Oracle. Oracle's been up for, let's see, we've got almost 17% growth for year to date. It's currently below. This is the one that's case is it's actually down. So this is a potential buying opportunity of the stock. Let's look at Oracle for just a second. So here's a case where it's on the other side, and we are oversold, and we are seeing changes in the PPO at the weekly level. So we're down here, and if you were looking for possible chances or opportunities to enter a position in Oracle, this might be something to think about. I mean, especially if you look over here, you say, well, wow, look at this. Here's a potential support area or resistance area from just over a year ago. And now we're sitting at it. We're at like, 194 right now. And the support resistance area from about a year ago was 191. So I don't know if you were looking for an entrance possibility, this may be something to think about. Um, this is a P4 for excuse me. We are in no. This is a P1. Oracle is a phase one. So not necessarily telling you to jump on it, but by the same token, um, yeah, these other things aren't telling you that either. But it's like things that you look at. These are things that you can think about when you see it. And here's one for for Mo Cigarette Company. And there's a couple of them that are here. Southern Company falls into this category. And again, if you go through the scenario, yeah, we may have had a pullback today, but if you look at this, the relative strength's still pretty high. And in the case of Mo, the whole ribbons are all green for this guy. So Mo is not. Was it Southern Company? Southern Company's in a good shape. So that's a case of where it's saying, hey, maybe we're seeing some support right at this level. Might be seeing a little love. Um, and on the daily chart, we're seeing where, hey, it possibly could come back up here. Anyway, this is another area to realize that that we have potentially something going on. I guess the reason for bringing these indicators to the table, so to speak, is during the last series where I talked about the big picture. And I said, hey, if you went in by market phases for, um, for the indexes, and you just started with, you know, the P2s and the P3s, and then you compared those with, you would see one way of looking at it. It's interesting. Here's the Southern Company that we were just there at. And there it is with a P2. We see it here with the 5-day and the 21-day relative strength guys. The columns as being green. We see that the whole 10, whole 20, and whole crossover are all green. So this would be one of those cases where this is a scenario where you have things that are telling you it isn't just this particular P2 plus these. You've added another area to think about, and you're doing it in a manner that is, even though this is a P2, you can look at this chart from a daily perspective and think, oh, this maybe has a chance to to make something out of it. This dashed line that's on the chart is a mapping of the SPX onto this chart, so we can actually see it. And if you think about it, in the watch list for relative strength, we have, I'm sorry, I had to add a couple additional things, and I had to take off the two long-term dates, the 2 month and the 3 month variations of the relative strength. So I don't have those on here, but in some ways, I don't know if that's a critical problem, because on the yearly chart, I actually can see where the S&P 500 index sits with regard to my symbol, and I can see that for the last year or so, well, actually for the last several months, the Southern Company has not done so well. So I could conceivably think, hey, this is a year. I could conceivably think that, you know what, there's a good chance it might come back up, reverse and come back up and hit something in this neighborhood. So the reason for bringing this up, the reason for bringing up the PPO and the white dots, is to provide you some context with other things that you could see on the watch list. Okay, let's go look at one of the other indicators we've got for showing timing. And over here on this chart, let's look at the things. 10-day exponential moving average envelopes. This is a really pretty simple concept. The price is basically take the price, subtract it from the 10-day EMA, and divide it by the 10-day and get a percentage. And in a nutshell, it's just saying, where does your current price sit in regards to the 10-day EMA? And James has made a point of saying he doesn't like to chase stocks that are more than 3% higher than their 10-day EMA. So on the chart, we've got the envelopes. Well, I never did have anything that looked like this on the on the watch list. So I added it. So here's a case in point where we're looking at a stock, and we can see the envelopes. We got the 10-day EMA, that's this white line, and then we have the line that's 3% above that, and then the line that's at 5%. And James said 5, and I was thinking, when I set this thing up, I just said my limit's going to be 3. So that's just where it's at. So if I see something that's more than 3% above the 10-day EMA, I'm going to flag that as being red, and I'm going to show you what it is. So here's a case of where this thing is 12.87% higher than the 10-day EMA at the current price. That's just where it's at. So, and I can tell you from experience, I've seen cases of where, you start to get that high and it doesn't stay there. It just flat doesn't stay there very long. I've seen it jump as high as 25% from one day to the next. Major gap that takes place, and generally all those shoot up and then they might fall back a little bit. So if you're looking to get in on some hot jumper, you may want to think about that when it's safe to get in. But as a rule of thumb, I kind of don't go after anything that's over 3%. So let's see what these things look on the chart. And we have that showing up under this timing column. And so if you see all of these numbers in here, this is the percentage of the price in relation to the 10-day EMA. And if you look at it, they're all white for the day. We don't see anything that's overpriced. Maybe there's something here. If we looked at somewhere else, maybe for NASDAQ, do we see anything that's red? We do not. Maybe in energy. I know that's currently a hot area. So let's see if there's anything that happening that's red. Ah, here's one right here. SOC, whatever that is, it's 8%, 8.6%. The price is currently 8% above the 10-day EMA. It just flat is. There's a there's a 10-day EMA and there's a price above it, and it's currently overbought by 8%, 8.6%. So it's telling you, hey, even though this thing is making a swing to the upside, it's currently kind of in the overbought consideration as far as it relates to this metric. So, in a nutshell, you can, when things are hot, you'll see that there's a lot of redness in this column, but today, not so much. All right, let's go back to our list of other guys here, and we can, what's the next guy on the list? Oh, the Stochastic 14.3. This is I'm not really going to talk about the details. Let's just look at the chart, and I'll show you what we actually have. In the case of the stochastic indicator, you have some internal metrics. One is called the full K line, and one is called the full D line. And it turns out the full K line is going to be a little bit faster line than the full D. And you also have, again, it's a stochastic, so it has a number that's going to be between 0 and 1 or 0 and 100. It's a range-bound thing. So again, you're looking for kind of anything that's over 80 to determine whether you have an overbought scenario or below 20 and have a oversold scenario. So my criteria was, if you have a situation where both the full K and the full D lines are over 80 and the full K crosses back through the full D, you get a white dot. That's a reversal. That is an overbought signal and is changing to go down. And likewise, if you have something on the other side where they're both below 20 and the full K crosses back up through it, you're going to end up with a reversal to the upside. So on the chart, those indications are shown as dark blue for being oversold, and these are all oversold. That's nice. And I'm not sure whether I can pick these up as 100, or light blue as being oversold for the stochastic. And I chose purposely because they look very similar. I said I want this color on the stochastic to match up with the same color for the white dots for the daily bars and for the weekly bars. And so if you look at, let's just pick at Amazon right now, that's showing that that's an over, where'd it go? Pick Amazon, and then let's go look at the daily chart of Amazon, and I'll show you what we're talking about. Okay, so here we are, Amazon. We're looking at the 6-month chart, and here we are down on a stochastic, and there's our white dot. It's showing us that yes, in fact, this thing is showing signs of pulling back. And normally speaking, you can see in here that the time between a high area or a low area, could be like maybe a week and a half or 2 weeks. So if you see something that's looking like this, there's a good chance it's going to pull back. Will it come through the 30-day simple moving average? And the answer is yes, it could. It was down here. And again, if you're a prudent kind of trader, you might take that into consideration. Am I close to what my target was at this point in time? Maybe I should do something to reduce my risk. Maybe I should think about putting on some bearish protection, if you will, so that I can help myself out a little bit. Another thing to notice here on this chart, Amazon chart, is that the posture, the market phases posture, is currently green. Well, it's not actually. It says it's P4. I lied. I didn't see this line here. Currently a P4. So it's showing that we've hit resistance. We we jumped to this chart because we saw that pale blue background in the timing column, which basically said we've got a white dot here. So this is a case of where we can tie some of these other indicators, a timing indicator, together with our trending indicator to give us a clue that maybe we should think about doing a little protection in this particular case. And the logic holds true if you look at these other symbols on here as well. It's just a question of going down the list and looking at each of these points and saying, where does it fit in the big picture with regard to my market phases condition, my relative strength, my hold ribbons, and knowing that what it's telling you, you may be able to put enough pieces together and go, I think I should take a bullish stance on this, or I should take a bearish stance on something else. Let's look at the list for one more thing and see if we got any other goodies hanging out over there. Let's see what we got over here. Page down. Last one on the list is the hold ribbons. This is one of James's favorite things for timing, and he likes to use. He refers to this as his, I think, his 1, 2, 3 method, where when he sees either a hold 10 or hold 20 go from falling to rising or rising to falling, his counters keep track of the time periods. And when you look at these things on the chart, um, here's a chart that happens to show the hold counters of the 10-day hold, the 20-day hold, and the crossover for the 10/20. So in this particular case, I can look at this and see, well, it's currently in a bullish posture. We've got green shading on the chart, which means that the 10-day hold is rising, and there it is, it's rising. It's above the 20, and the 20 is below the 10. And oh, by the way, the 10 has been green, rising for the last 4 days. The 20 has been falling, excuse me, it's been rising the last 4 days. The 20 has been falling for the last 10, and we've had a crossover 3 days ago. And the difference between the colors, the brighter colors means it's happened within the last 3 days. So as soon as this thing goes to day 4, it's going to turn to be a dark green. So, from a timing perspective, James would say, well, hey, if the 10 goes green, well, that counts you as 1. And if the 20 goes green, that's 2. And if you get a crossover, that's 3. And some variation of that is basically, when do you want to get into the trade? So from his perspective, from the 1, 2, 3 timing scenario, you would end up with something that looked like this is probably a good spot to think about making an entry based on what we see on this chart. So if you look back at the watch list, all of the hold ribbons are shown over here on the right. So here's the hold 10, hold 20, and hold crossover. And the color coding that you saw on the chart is exactly the same color coding that we've got here. So the point of this whole exercise was to show you the other tools that have been pulled forward and placed on the watch list. And the new tools that I've added are the PPO study that we've got here in this particular column, and the timing study that shows the relationship of the price to the 10-day EMA. And oh, by the way, the stochastic 14.3 that is useful, very useful for showing near-term pullback slash overbought and oversold conditions. And the goal of today's video was to try and provide you that perspective of other things that we have in the software package that can be very, very useful for helping out with your trading. And timing is a really important aspect of that. And I want to add one last thing to this video. If you got anything out of this video and that can help your trading, I'd appreciate a thumbs up on this video if it helped you. Thank you very much.